All right, today we're going to dive into a part of the financial world that, well, it plays by a completely different set of rules. We're talking about a place where the entire idea of charging interest is just off the table. This is the world of Sukuk, a financial instrument that's not just an idea, it's a multi-hundred-billion-dollar market that is reshaping entire industries.
So, to really get what makes a sukuk so different, let's start with something we all know: a regular old bond. You know the drill. At its heart, a bond is just a loan, an IOU. You, the investor, lend money to a company or a government, and they promise to pay you back, plus a little extra in regular interest payments. Simple, right? It's pretty much the bedrock of modern finance.
Okay, but now just imagine for a second that the most basic part of that deal, the interest, wasn't just frowned upon, but was actually forbidden, completely prohibited. How would you possibly raise money for huge projects, for businesses, for governments? How do you make capital work without charging interest? Okay, so let's get into this because this one core principle of Islamic finance, it changes everything. And I mean, this isn't some small footnote or a minor rule. It's a foundational belief that completely redesigns the entire financial landscape from the ground up.
So, under Sharia law, there's this concept called riba, and that's the Arabic word for interest or usury. The idea here is that charging or even receiving interest is haram, which means it's prohibited. Why? Because it's seen as an exploitative practice. Money shouldn't just make more money out of thin air. And because of that one rule, traditional bonds, they're just not an option. And this is where you see this huge fork in the road. On one hand, you have conventional finance, which is almost entirely built on debt. You lend money, you get interest, and you basically transfer all the risk to the person borrowing. But Islamic finance has to go a different route. It has to be asset-backed. And it's built on these two really important ideas: sharing risk, not transferring it, and of course, avoiding riba. It also avoids what's called gharar, or extreme uncertainty.
And this, right here, is where the ingenuity really kicks in. If you can't create debt, you have to create something totally different. And that something else is the Sukuk. It's an instrument that solves this whole capital raising problem by completely redefining the relationship between the investor and the thing they're investing in.
So what is a sukuk exactly? Well, at a glance, it might look a little like a bond, but underneath, it's fundamentally different. Instead of being a certificate of debt, that IOU we talked about, a sukuk is a certificate of partial ownership. This is the key. The investor isn't a lender anymore. They are a part owner of a real, tangible thing.
And this quote just nails it. A sukuk is a true hybrid. It's not really a stock, but it's not a bond either because there's no debt. It just carves out this totally unique space for itself in the financial world. It's a little bit of both.
So how does this actually work in the real world? I mean, if you can't pay investors interest, how in the world do you give them a return on their money? Well, the answer is pretty brilliant. You tie the investment directly to the performance of a real asset.
Okay, let's walk through the most common type, which is called the Sukuk al-Ijara. It's a fascinating process. So first, a company, we'll call them the originator, sells a real asset, like a building, to a totally separate legal entity, an SPV. Then, that SPV issues Sukuk certificates to investors, raising the cash to buy that building. Now here's the really clever part. The SPV immediately leases the building right back to the original company. That company pays rent to use its old building. And those rental payments, they get passed directly to the Sukuk holders. That's their profit. Then, at the very end of the lease, the original company buys the building back, and that returns the initial investment money to all the Sukuk holders. And just like that, no interest was ever paid. All the profit came from a real, tangible, rent-paying asset.
This chart just lays out the difference so clearly. A bond is a debt obligation. Your return is interest. A sukuk is asset ownership, and your return is a share of the profits, like the rent we just talked about. But look at that last line, risk. With a bond, the risk is on the issuer. With a sukuk, because you're a part owner, the risk is shared by all the investors.
And that's really the crucial thing to understand here. If you hold a sukuk, you are an owner. You get a piece of the profits that the asset generates, absolutely. But, and this is a big but, you also share in the risk. If that underlying asset does poorly, you share in those losses too. Your investment isn't guaranteed because you're a business partner, not just a lender on the sidelines.
So let's zoom out a little bit and look at how this really clever financial structure has built something much bigger than just a product.
And make no mistake, this is a huge deal. We're not talking about some tiny niche investment here. This has exploded into a multi-billion-dollar global market. It's funding massive infrastructure projects. It's funding airlines. It's funding entire government budgets, especially across the Middle East and Southeast Asia. This is a major force in global finance now.
And this quote really gets to the engine driving all that growth. You see, the goal here isn't just to make a profit. It's to ground finance in the real physical economy. By tying every single investment directly to a tangible asset and a shared outcome, the whole system is designed to encourage trade and entrepreneurship, not just generating wealth from abstract debt. It's a totally different philosophy about what money should actually do in a society.
And that's really the ultimate takeaway. A sukuk is so much more than a clever workaround for a religious rule. It's the physical result of a completely different way of thinking about money, about risk, and about the relationship between people who have capital and the people who need it. It really is finance with a philosophy.
Which kind of leaves us with one final thought, doesn't it? The Sukuk forces us to question one of the most basic building blocks of our own financial system. It really makes you wonder what other giant ideas, what other foundational principles that we just take for granted every single day are just hiding there in plain sight, waiting for someone to come along and reinvent them.